Hey guys, and welcome back to the channel. Thank you for joining me here today. Today I kind of want to discuss an interesting article I found on MSN.com, and it kind of just populated in my news ticker, and happened to click on it, and it is regarding cryptocurrency mining, staking with regards to your income taxes. Now, I don't know about you, but when it comes to reporting uh, my losses and my gains on my cryptocurrencies with regards to the IRS, this has me freaked out. Now, I've been in the mining space for about, I want to say about a month now, and I've been in the crypto space for about 10 months now. And this is going to be the first year where I actually file my taxes that's going to include cryptocurrency. And I was kind of in the fog about how to do so. Now, it's very hard to find a tax person that is very knowledgeable about how to report such things. So, kind of really want to be cautious when I go ahead and file my taxes this year, and I want to report all my losses and gains and get what's coming to me. Now, I have been under audit before with the IRS, and let me tell you, that is not a situation that you want to be in when it comes to reporting your losses or your gains. Now, when they come, they will come with the fierceness, and they are going to want every single piece, every single dime, penny that they have coming to them. And if they don't get it, they will put a levy on you, and it is nothing that you want to go through. So, before we jump into the article, I kind of wanted to jump into today's market and show you what we have going on here. And as you can see, today was a beautiful day for cryptocurrency. Just about almost everything was in the green today on the up and up. And as you can see, Bitcoin still holds its dominance, and it's actually up 10.9%, 95%, and which is great because when Bitcoin goes up, everybody goes up, right? So that includes Ethereum, as you can see, 11.25%, and a few of the other coins, Cardano up 7.8%. But let's go ahead and jump into the cryptocurrency that we care about. All right, I'm gonna jump into my watch list up here, and this is kind of like a small look into my portfolio of the coins that I currently have or holding in my possession. Now, if we look at HNT today, you can see that it was up just changed 6.12%, currently trading at $27.34. Now, this is up from yesterday, which was about $25. And it's great to see HNT on the up and up, and keep mining, keep making those rewards, and we'll see if we can become the next crypto millionaire, right? So let's go ahead and jump into today's article that I want to discuss. Let me go ahead and move this down a bit. Now, as you can see from the title, the IRS will not tax unsold tokens after all. Okay, so let's jump down right here and get into the article. So, as previously stated, the Internal Revenue Service will not tax unsold tokens, a major relief for both cryptocurrency stakers and miners. Now, what happened? So, why aren't they going to go ahead and charge us for this cryptocurrency that we are mining and earning? Well, what happened was Joshua and Jessica Jarrett, a couple from Nashville, Tennessee, filed a legal complaint in a district court requesting a refund of $3,293 of income tax paid for the receipt of 8,876 Tenzo crypto tokens. The duo asked for a $500 increase in tax credits, citing lost income, according to the Blockworth report. Now, then what happened? Well, apparently this couple, they looked like they were either mining cryptocurrency, and they received 8,876 Tenzo coins in doing so. Now, according to the current or previous tax law, under this tax law, anytime you generate an income, whether it be the cryptocurrency or what have you, anytime you make an amount of money, the federal government said we are going to tax you. So, why does this matter? Well, the federal income tax law does not permit the taxation of tokens created through staking enterprise, read the complaint filed by the Jarretts. Now, that's exactly stating what I just previously said before. Now, here's the beauty about their story as they described it to the IRS. Now, right here where it says, Like a baker who bakes a cake using ingredients and an oven, or a writer who writes a book using Microsoft Word and a computer, Mr. Jarrett created property. Like the baker or the writer, Mr. Jarrett will realize taxable income when he first sells or exchanges the new property he created. But the federal income tax law does not permit the taxation of the Jarretts simply because Mr. Jarrett created new property. Now, like I said before, these people were mining, and they were receiving rewards through their mining, like much like we do with HNT. They created 8,876 Tenzo coins, and according to the government or the IRS, they think that they had the right to tax them on it. Well, here's the mindset behind that. How can you tax me on something I haven't sold or traded? Is basically what they were saying in their complaint. So how does that work with you all? If I make something, if I went out to my garage and I made something, piece of wood in a certain shape and called it art, does the government have the right, or does the IRS have the right to tax me money because I created that? No. It's only at the point where I trade it or I sell it is where I'm generating some type of income or reward from the making of my property. Now, we're going to go ahead and scroll down a little bit further right here. It gets a little more interesting in this. Now, previously, the IRS, I'm reading from down right here. Previously, the IRS in 2014 through 2021 notice said that when a taxpayer mines virtual currency, the fair market value of the currency as of the date of receipt can be included in your gross income. No specific mention in that law was was ever mentioned about staking. Okay, so it was kind of overlooked. Maybe is what I'm kind of how it's I'm reading it. But this year, the IRS will ask everyone filing a return this year about their cryptocurrency activity. And this is where you need to pay attention. And plenty of people have questions about the tax implications of buying, selling, and trading. The IRS treats virtual currency like Bitcoin or Ethereum, and including NFTs, differently from other assets and investments. And there are specific rules that you need to follow if you sold or traded assets last year. The average investor needs to understand that cryptocurrency is not like any other type of currency out there. Cryptocurrency is treated as property for tax purposes. So, anytime you're going to use cryptocurrency or transact in cryptocurrency, you're going to have the potential for gain or loss on your tax return. Now, there are, according to this article, there are important caveats. If you used fiat currency, that is US dollars, to buy crypto assets in 2021, you do not have to report anything about it in your tax return, at least for now. It's always changing, and you know how the IRS is about collecting their money. So nonetheless, if you sold crypto, you need to report that on your return. If you traded one cryptocurrency for another, that's going to need to be reported too. Reporting gains and losses is fairly straightforward once you know the ropes. Okay, so and there's a lot of tools out there to help you to do the math and whatnot. And I've actually been researching some of those tools myself, and maybe when I find them, I'll go ahead and post them up in the description section below. All right. So with all that said, how is the IRS handling cryptocurrency in the 2021 tax season? Now, this tax year on the 1040, the individual income tax return form is going to feature a specific question, and that question is going to be: at any time during the 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currencies? Uh, and through the IRS eyes, they're technically asking about receiving cryptocurrency as well. But the IRS is pretty much going to be focused on whether you unloaded it by selling or trading. Now, if you just purchased cryptocurrency with US dollars and that's all you did during the year, you didn't sell it, you didn't exchange it, you just kept it in your wallet for the whole year, You can check no on that box. Now, the bottom line is that the IRS is looking for taxable transactions. So if you have taxable transactions such as selling or trading, you should be checking yes in those boxes according to the article. Now, this is a pretty good read. I'm going to go ahead and let you guys read through it, and there's a lot of good Q&A in here, and we're just going to answer a lot of your questions when it comes time to file your taxes. Now, I want to ask you guys a specific question, and you let me know in the comments below. Do you think the federal government or the IRS has the right to tax you when you are creating property? Now, remember what I said. You are in your garage and you make something, and you have not sold it, you have not traded it, you just made it. Does the federal government have the right to charge you taxes on it? I'll leave that up to you guys. As always, guys, I'm the chemist, and I hope you enjoyed this find. And go ahead and leave me a comment below. Don't forget to check out the descriptions. And I actually opened up a Amazon affiliate store, which is going to help you greatly when it comes to purchasing your mining equipment, whether on grid, off grid, and what have you. So go ahead and check that out, and don't forget to like, subscribe, and share. And I'll see you in the next video. Peace.